Good afternoon, everybody, and welcome to this edition of Ask the Experts for Tuesday, August 4. My name is Carl Capolingua. I'm the market analyst over here at Think Markets, and it is a pleasure to be with you as we get to bring your portfolio to the table, or at least you bring it to the table, and I'll do the analysis. Where should we start? Let's start with a chart, perhaps on DUB. And this one's come in from John. And ignore all of the scratchings on the charts because in various Ask the Experts, inevitably I end up drawing on them, and it doesn't necessarily mean it's relevant for today. So it looks like I've drawn on this in the past, and funnily enough, a very similar pattern that I drew last time. Maybe I was talking about the potential breakout there to what we're seeing today. So if I grab my trusty ellipse tool and draw that, we're seeing a similar consolidation pattern. And markets and stocks or commodities or whatever it might be often go through these phases where we have a move, we have consolidation, we have a move, we have consolidation. Great news for Dubber is I think we're breaking out towards the top end of that range, and quite often you'll see that the first breakout doesn't take, and that's what we're seeing here. So a lot of people get excited, they rush in. Fund managers, they like to sell into rallies quite often. We see the price pull back, but it's all a balancing act, isn't it, between the ones that are selling into rallies and the ones that are buying into the dips. And the net should show up in the chart. So if you've got more funds buying on the dips, okay, think about the dips that look like, let's draw this tool here. So if we have, these are the dips, right? If you've got more fund managers buying these dips, compared to the ones who are selling on the rallies, right? It's never happened before in the history of mankind that all fund managers agree on a stock. Some of them were in very early and they're taking profits. Some of them, think it's got a long way to go. But the bottom line is, if more of them are buying dips than are selling rallies, we have to get this sort of sawtooth, this rising sawtooth patterns. Long story short, we call that rising peaks and troughs, and that's always a good sign that the demand-supply fundamentals are heading to the upside. So I like Dubber on the chart. I think it's a very strong, constructive chart. If I had any criticism, it would be in the number of black candles that we're seeing, which is kind of the other piece of the puzzle. So this is more of a broader supply demand technique. The real coalface are these candles, and what we can see is that often, and for me too often, the stock opens well or flat and then is down by the end of the day. But I think it's sort of like a rugby scrum, and the rugby scrum is sort of heading towards the goal line if the goal line's up here somewhere. It'd be nice if it was cleaner, and that would give me more comfort. But otherwise, look, I'm pretty happy with it. What we can also do here is go into the fundamental analysis tool, and this is as probably in-depth as fundamental analysis as we can do in this sort of a session. And we type in DUB here. And the data from Thomson Reuters in a product called Refinitiv Icon will go load up, and this is a broker consensus, and depending on how many brokers we have, we'll be able to get some hopefully some forecasts, and then maybe I can do a valuation. Unfortunately, we've only got one broker covering this as logged by Thomson Reuters. The other problem is we're not going to have any earnings until we get to FY23, which makes it a little bit harder for my model to work. But if you remember 2 weeks ago, I had upgraded the model, the spreadsheet, and it didn't take anything that didn't have a P after FY21, but I've upgraded it again. So now that it does, and we can get some sort of an idea of a valuation. Let's change this to high. It's got a FY23 P of 313. So that's pretty hardcore. That's out there in terms of a massive PE. And let's have a look maybe, but it is growing. So if we're not going to make a profit until FY23, but if you look at the step up from FY23 in net income and EPS, we are seeing substantial growth out from there, and the growth rate is going to be order of magnitude, 138%, and then 233%. So the earnings are expected to come deep into the future. Yeah, it's not exactly what you'd call cheap based upon the forecast PE. So the current price is $3. And this is saying fully valued at $1.68. We're way above that. So it doesn't necessarily mean the stock is incorrectly priced. I mean, the market is the market, and it doesn't mean the model is broken. It might mean that the model is not best suited to a stock that has earnings so far into the future. But look, I can't give you a hard yes or no on that from the fundamentals, but the chart looks pretty good, John. Let's move into the next one, which is CSL. I did a piece on this on Ausbiz a week ago, maybe a couple of weeks ago, and we were looking at the monthly chart for CSL. And this is pulling things back to whether you're an investor or a trader. If you're a trader, it probably doesn't look fantastic. We'll talk about the daily chart in a second. If you're an investor and you're holding this in your portfolio, well, you're taking a long-term view. So you should be using a weekly or a monthly chart, and nothing shorter than a weekly chart for your analysis. If you're a medium-term trader or a short-term trader, then you'd be using a daily chart, and lower, potentially you might be using an hourly chart or a 15-minute chart. But for investors, look, I think this is very much intact. I can't see anything to worry about at all in terms of CSL. In fact, probably the balance of probability lies to this one continuing this long-term trend in the not-too-distant future. So I think that's pretty constructive, and the monthly chart is fine. From a daily chart, so more the shorter to medium-term traders, it's not exactly, setting the world on fire. However, there are some constructive signs here we're moving in sort of peaks and troughs here. I like the candles yesterday and today. I think that's pretty good. We've moved back into this short-term uptrend, long-term uptrend, as very weak as it is trying to re-establish itself. So look, it'd be a hold for me, and I can't call it a buy because I think there are better charts out there for shorter-term traders. But medium to long-term, I think it looks very good. What we can do, and we will get, this is actually a really good exercise because we're going to see the difference between DUBA, which is, let's face it, a lesser known stock, to CSL, which is one of the majors, and we're going to see the difference in the amount of data we can pull out for this one. So we've gone from having just the one broker there to having 2, 6, 15 brokers, because CSL, global blood plasma leader. It's not just going to have brokers who cover Australian stocks covering this. We're going to have international brokers covering this as well. And they are at a buy. So we've got an average rating of a buy, 2 strong buys, 4 buys, 9 holds. Great to see no sells and no strong sells. So I always say beauty is in the eye of the beholder. And I don't like it when somebody is beholding the negatives on a stock, as few as they might be. So that's really encouraging. In terms of the broker's price target, now you can either get it up here, but I tend to head down here because I'm going to do some work in this section. But we've got about 7% upside to the consensus target from here. Having a look at, I've got another third-party app running on the side screen you can't see, but looking at some of the other bits and pieces I can do. And I think, yes, that's roughly that. Look, will I go with my third-party consensus data? No, I'm going to leave that off, and we'll give CSL the benefit of the doubt. I don't have this third-party consensus data doesn't have, and I can see here, as many brokers as these guys do, so let's stick with those. And let's go with their growth rate, because I'm pretty comfortable that CSL probably will get back to a growth rate somewhere around there. And then it just drops out. It says fair value is 241 versus the current price, fully valued around 320. So we're sort of somewhere in between fair and full value there. And that's just how CSL goes. It's just for as long as I've been covering CSL, except for the very, very early days, it is never been cheap. It's always been quote unquote expensive by most fundamental analysis metrics, but that simply speaks to the quality of the stock, and that's what you're paying a premium for. So I can't see anything in the fundamentals that would suggest to me that we need to sell it. I'm seeing growth in here. We're going to see some growth in here, coming back in. Yeah, it all looks pretty good to me here. So happy with the chart, happy with the fundamentals for longer term holders, I would suggest, on CSL. Next one there is CSR. I don't have to go too far on that one, do we, alphabetically? Coming up, we're going to have plenty of brokers covering this one as well. It's obviously widely held. We've got 2 strong buys, 3 holds, 1 sell. That's annoying, isn't it? Somebody doesn't like it. Looking at their mean target, we can see 635 is their target, which gives us about 14.4% upside. That's always nice when brokers are seeing a bit more upside in it than the current price. And looking at our EPS growth, and that's pretty typical for CSR. It's very rarely going to be a 19% grower or a 29% grower. High single digit growth is pretty typical. So I think we can use this estimate with a great deal of confidence. I wouldn't use a high for CSR. That's silly. I think a mid is probably better. Okay, that starts to make a bit more sense now. But it's still looking fairly well priced, actually, even based upon that. So happy with the valuation, happy with the broker consensus. The brokers are seeing similar sort of upside to what the model is seeing. And let's have a look at the chart. The chart is disappointing, isn't it? So we'll kind of tick on the fundamentals. We'll tick on the broker consensus. That's nice. The chart is a bit disappointing. We are still in a long-term uptrend. So if you're a longer-term trader, look, no need to panic just yet. If you're a bit more shorter term, then yeah, it's not a great setup. Look, what we do have is a very clear-cut point where we would not want to be owning CSR any longer, and that's below that 520 zone. So it gives you, I guess, a very sensible place, a very clear-cut place to set a stop loss. And I don't like setting stop losses in the market. I like to obviously have a mental stop loss, and as I do my analysis each day, I check on those and I check on the charts and I see if I need to do anything. Because what I don't like to see is when, and we've all felt this, if we've used a stop loss, the stock come down. Let me make that a solid line. So the stock sort of come down into that zone and then do this at our stop loss. One of those days where we get triggered because we're not the only person who's using technical analysis who's setting a stop loss there, right? If you can imagine, the funds know that as well, right? So they know there's some stop losses down there and they'd like to go hunt for those stops. Especially if you're a buyer, you'd like to hunt those stops out because the best way to buy is when other people are selling, okay, and selling at depressed prices. So the funds might go for a little sneaky stop run here. And if we've got our stop in the system, okay, we're one of those people that are getting pushed down to the market, only to see the buying come in by the end of the day. So I like to just monitor how things go at my stop level and then make that decision based upon the candles that occur there, okay, to see if there is the support I was hoping to see there come in. It might not be there on Tuesday, but it was there. It came in on Wednesday, if you know what I mean. Now, that requires a hell of a lot more discipline. I would say experience and patience and just having been around longer to be able to follow that through, because if it doesn't go the right way, then it's up to me to get myself out of the market, compared to if I use a stop loss, then at least the computer's getting me out. Okay, so you have to then question also your discipline, okay, as to whether you'd use that sort of technique that I use for my stops. Long story short, as long as the long-term uptrend holds, I'm happy with CSR to hold it if I had it. If I didn't have it, I'm not exactly running out to buy it just yet. I could see a case for buying it if it moves back above this zone through here. So if we see a nice white candle like that, so if we see that picture, that's going to start to get me very interesting, because that's telling me that this long-term uptrend zone is actually holding, and then we can move back up to those highs. So what to do if you're a holder, what to do if you're waiting to buy it, I guess. And we looked at the fundamentals and they checked out, and my model was pretty consistent with the broker valuations. And let's go into the next one, Kogan from Lily. So KGN, grabbing as much data for you as I possibly can. The good news is on the chart, I think there's a pretty strong probability that we actually have seen a low here. I think this is really good. So I like the big spike in volume here on this low, and I like this big white candle. That really sets the low, or sets the tone for how investors were thinking about that low and whatever that bad announcement was that occurred. It was a profit downgrade from memory. And here, so if you see the difference here, so we've got a big volume spike here, volatility spike, but that's on the black bar. So I like to see, yes, that's a black bar, but then we're seeing that elevated volume come through on this day here, and then really very little downside volatility after that. Started to look good here. Look, for whatever reason, it's just moved back into this medium-term downtrend. So look, I think if you've had it, you're long suffering. I think it's worth hanging on to the basis that I do believe that a long-term low has been made. Not great through here. Look, let's see how it goes. If you don't have it, it's not a buy. I can be very straightforward here. It's not a buy yet. If you have it, worth hanging on the basis that this might be the low. If you don't have it, it's an avoid, because there's just not enough in it to tell me to buy. We're in a short-term downtrend. We're in a long-term downtrend. We're in lower peaks and troughs. The candles have turned all black. Okay, below 870, if you're a holder, I'm starting to get extremely concerned. Let's have a look at what the broker's saying. We've got 2 5 brokers there, one with a sell, one with a strong buy. The target is showing quite a bit of upside. So the broker consensus target is 12.27 versus the 10.45 price. Now that I'm pretty sure is yesterday's close. So whatever it's done today, right? But brokers are seeing some upside. Let's flick that back to there. Let's look at the earnings growth estimates, and we're obviously going 20% for this FY, then 10, then 23. So we're sort of digesting that inventory screw up and potentially a little bit of normalisation in people's spending patterns, but then back to growth after that. I don't have an FY24 at this stage. Having a look at what we've got here, 41, 6 and 37. These guys are a little bit better, to be fair. So 0.416, 0.412. Yeah, look, I think Kogan's probably deserves a high, and it's coming out as pretty good value here. And if we turn that on, it gets a little bit better. So let's stick with those brokers. There's 2, 4, 5. I've actually got more brokers covering it on this third party here. So I think it's pretty well valued. I think the chart is telling us to hold if we're a long-term sufferer, but to just keep an eye on it if we aren't. Hopefully, Lily, that's satisfying your analysis there. Ticker code 360 from Kavinda. Now, this is the family tracking software, so you can track more for teenagers rather than smaller children. So you're tracking their driving, where they are, and if they need help. It's going quite well in the US. Very strong subscriber growth, and we can see on the chart looks fantastic. So 625.06, that would have been where I covered it in Think Technical a few months ago. No doubt as a buy, we've been calling it a buy in Think Technical for quite a while. I can't see any reason why you'd sell it if you had it. If you didn't have it, I'm just waiting, I think, for an opportune point to enter this trend. And it's getting close to the short-term uptrend zone. We're starting to put in some reasonable candles here, some nice shadows telling me that there's accumulation here, not distribution. So the funds are still buying the dip here, anywhere around that sort of 750 with a particular candle for Kavinda if you don't have it. So something that looks like this into the green zone, I think would be very constructive to add to your position, Kavinda, if you do have it. Or if you don't have it, then to buy it. So 360 is coming up here on the fundamentals. Hopefully we've got a few brokers on this one. Not exactly a widely covered one, but no, we do. We've got 4 brokers and they're pretty happy with it. So 1 strong buy, 3 buys, and a price target at 10.79. Now that surprises me a little bit. I think that is very positive from the brokers, isn't it? Let's change that over. We don't have a PE because we're not making any money this year, next year, the year after that, and not until FY24, which is unfortunately too far out for me to make anything work. It's not gonna. Oh, it's working there. Yeah, look, I'm going to leave my tool on this one and just go with the brokers. The brokers clearly like it, and the big growth is going to come. They're reducing their losses at this point in time, and the growth is coming down the track. CXO has just come in from Peter. CXO. Oh, this looks nice. This looks really good. Core Lithium. Now, there's lots of lithium stocks out there. Apologies for not knowing them all off by heart. So I haven't come across this one. I've come across many, but not this one. And I'll have to look at this one because the chart looks very, very interesting. Once again, that huge rally through here when I guess it was in the news. Maybe they found something. Who knows? Lithium stocks were in vogue, whatever. Everybody got all worked into a lather over it. And then so often we see, black candles come in and then it's just people taking profits for days and days and people who got in at the top, eventually having enough and getting out. And even selling into the rallies. What we do want to see at some stage, though, is this sort of building up again on these dips. This movement from generally lower peaks and troughs into higher peaks and troughs. The accumulation, the signs of accumulation coming back in, taking out areas where we had resistance before, where supply was too great to overcome. And we move down from that level. So I think above 30, this is looking really, really interesting. The short-term trend is re-established. The long-term trend is intact, and it's been intact the whole way through. This is interesting here. I like this this volume push to get this going, and the candles that accompany that volume push. And it's no surprise to me that you have little pullbacks along the way. So I like this one. I think it looks really interesting. You know, I can't see anything in there that would not that would prevent me from buying this almost sneakily as early as today. But if it was to push through 30 cents with, and let me be a broken record here, but show you the candle I'd like to see. So if you're a little bit more conservative, look, wait for that candle. You know, if you get in at 31 cents and not 29 cents, but you've got infinitely more confidence that this thing's going to go up, well, who cares? I'm trying to get rid of that one there. To show you the type of candle. And it's not how the candle looks during the day, everyone. You shouldn't even be looking at the market during the day. It's how the candle looks at the end of the day. So was the buying sustained into the close? What you don't want to see is, you know, a candle that looks like this, and you got suckered in, because don't forget that candle at one stage during the day looked like this. So if this was at 12 p.m. Sydney time, and then this is at 4 p.m, right, and you bought it here thinking, wow, that's the candle, that's exactly the candle Carl told me to get in on. Yeah, but you did it in the middle of the day, and then we're here. You know, that's very different. The buying wasn't sustained. In fact, this one's not ready yet because the sellers are still lurking around. But if we swap these things around, right, and that's 4 p.m, that's a completely different story, because the buying was sustained all day. In fact, the only thing that stopped the buyers from continuing to buy on that day was the market closed. And therefore, there's likely for that demand that was in the system at 4 p.m. to be there the next day. Why wouldn't they be? Okay, looks very interesting. I don't think I'm going to get any fundamentals on that, but I can try. I doubt it. Peter's also saying, everybody, that CXO is cashed up. And it's a cliche. He's saying it's a cliche, but they say pros set the closing price. That is not a cliche. That is absolutely true. We don't have any data there. So, look, I don't know where they're operating. I will go check it out after this for my own interest, because the chart looks interesting. But it's good to know that they do have cash in the bank, because the last thing you want is to buy something that really is on their last dime, because you know there's a capital raising coming up, and potentially even, you know, they've got a few of their buddies just sneakily pushing up the price just to get the capital raising at a better price, and then all of that support dissipates and you're stuck in the stock. Okay, last one for today, everyone, is going to be Santos, which is a nice one to finish on, because no doubt we will get plenty of data on Santos. That's disappointing. Yep, I think, you know, straight away we can see some problems here. We talked about CSR. So we talked about CSR earlier on, and we said that we don't want to see it break below that long-term trend. And look, I can't make this stuff up. I didn't tell CSR to stop at that long-term trend and bounce and try to go up, right? This is just the moving averages I like to use, okay? And because I find that time and time again, they tend to be where the market, at points that the market values. That's just my experience of having I've been looking at charts for over 20 years now. So we can see where the long-term trend supported Santos in the past, and where I get really concerned is where we slice through that long-term uptrend, and the long-term uptrend then stops being support and starts to be resistance. And we can see that's what's happening now. That's concerning for me. I think we're at a little bit of a tipping point here. So yeah, black candles give it away, everyone. If you've got a stock that has, you know, predominantly more black candles than white candles, it's just not worth it. It's not worth your sanity, because you know, you're thinking, look, my stock's great, I've done all the research, it's great, and then you just keep getting these black candles. Yeah, somebody out there doesn't agree with you. Let's have a look at the fundamentals. Are there any redeeming features of Santos? The brokers like it. What does that mean? And here's the thing about broker consensus, everyone, and this is why you really need to take this stuff with a pinch of salt, okay? Because who do you reckon's selling Santos right now? I know somebody's selling Santos. I know somebody's been selling it on all of these black candle days when the market's been going up, because I know the market's making record highs, and yet Santos, it opens and it goes down on the day, and yet the Aussie market was up 40 points. Or the oil price was up, you know, another $3 a barrel US, and yet Santos opened up and then closed down on the day. It's horrible. It's a horrible feeling. So all the broker consensus, what's it worth? Because guess who's selling the stocks, right? The The brokers are selling this stock. Now, they're selling it for clients, don't forget, but they advise their clients too. So as much as we get this data and they make this data available to people like Thomson Reuters and through other various sites, we have to be careful. The brokers have it as a buy, but hey, somebody's selling it. Strong buy 2, buy 7, 3 holds, and I don't believe that the one sell is the only person selling it out there. And their targets are still much higher, 18.5% to the good here. And when we bring it back to here and we're going for growth rate, and part of the problem is this in the future. So, Santos's earnings are expected to grow this year and next year, and then they're expected to contract in FY23 and 24. That gives us an average growth rate of minus 5% over that time. Look, it's an oil company. I'm going to go low, as brutal as it sounds. And even if I said this was 0, it's fair value. And that's no surprise. If my model is working, fair value should be about the current price. If my model is working, if I've got the metrics set up correctly. So fairly valued. The chart's not looking great. Yeah, it depends. I mean, and this is where discretion comes into it. And you find me the fundamental analyst or the technical analyst that doesn't use discretion, especially fundamental analysts. So, if I go for a mid-PE, mid-tier PEs, oil companies, they don't tend to have PEs of 15s to 20s. If you've done fundamental analysis long enough, you know that. They tend to have PEs of sort of around 10 to 12, and that's what this does. Tech companies, they typically have PEs around the 40. They can accommodate those because of the earnings growth. The earnings growth isn't here. Even if I go really generous here and say that it's a mid-tier, I guess then it starts to look a little bit cheaper. Turn that off. Yep. But yeah, look, somewhere between there and there. Look, I wouldn't say it's expensive, but I wouldn't say it's a bargain. I've answered all those questions. Let's go back to those slides. Upcoming webinars. Next week we'll be doing the top 3 ASX travel stocks and travel sector review. We did one earlier in the year where I must admit I thought a few of them looked pretty good, and sorry if I didn't predict that we were going to have half the country in lockdown again. I probably should have, but we'll pick up the pieces and we'll see where they are. It's probably worth doing around this time. And then tune in a couple of weeks' time for Ask the Experts again. That's where you can register for those. If you're watching me on YouTube in the recording, hit the like button and don't forget to subscribe. Well, that's it for me today, everybody. Thanks for joining me. Hopefully you got lots out of it. It was lots of fun. And I'll see you in a couple of weeks for another Ask the Experts. All the best for your trading. Until we catch up again. Bye-bye for now.